Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Friday the 5th of October 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of, and another interesting session over the last 24 hours. A bit of pushback from the likes of Euro against the US dollar and the British pound as well, standing up for itself and back again above 130, if only marginally, but decent gains there. But not good news again for the Australasian currencies. The Aussie dollar down by another 0.5% against its US rival, and the New Zealand dollar suffering almost a 0.75% fall over the last 24 hours. Dollar Canada and dollar Mexico, the dollar making gains there as well against its nearest neighbours, although interestingly, perhaps due to the pushback from the euro, dollar index largely unchanged, 95.83 trading up by just 0.07% shortly before we recorded the video. Okay then, what's on the calendar? Events that may move the markets today. Well, of course, it's non-farm payrolls day today. The September employment situation report coming out at 12:30 GMT at 1:30 London time. There'll be a particular emphasis today, I feel, on the wage elements around the report, with US interest rates being pushed higher. Naturally, anything that adds to inflationary pressure in the US would also perhaps feed into that story. So that's what I would be watching. In terms of the headline figure itself, market consensus is for 185,000 new jobs created, with expectations of the unemployment rate falling to 3.8% from August's 3.9%. Alongside the US non-farm payrolls, will also have international merchandise trade data for August out of Canada, and the small matter of the Canadian unemployment report for September as well. And then there's a break until 1700, when we'll get the Baker Hughes US oil rig count for the preceding week. And if you're still in the market at 1900 GMT tonight, you can see consumer credit change data for the month of August. Okay, well, let's take a look at the breaking news and comment that's caught my eye overnight. First of all, US equity indices suffer some of their biggest drops in recent months as the realities of higher US interest rates hit home to investors. Tech names are hardest hit on the Chinese chip scandal. Of course, that news breaking yesterday, and many leading tech names were implicated, or at least implicated as targets in the Chinese hardware hacking attempt. Meanwhile, staying in the States, US senators will vote today on the appointment of, or not, of Brett Kavanaugh to the empty space on the US Supreme Court panel. Obviously a controversial character. I don't need to go into the details there, but it'll be interesting to see how those senators vote in that regard. And speaking of voting, Brazil is preparing for presidential elections on Sunday. Obviously, these have been quite controversial. Brazilian politics has been mired in scandal for many years. I guess the electorate will be hoping that they can put the corruption and problems behind them, and let's see what happens in Sunday's vote on the back of that. Finally then, food for thought, something for you to take away with you into the trading day and beyond, and why not think about this? The bull market in US equities is edging towards its 10th anniversary. And it's timely then that Forbes magazine takes a look at the sectors that have driven growth in the US 500 index over the last decade. Very interesting to see this graphic. Takes a bit of studying, but net it's technology stocks that have really driven the gains in US indices since 2009. Financials have played their part too, as has healthcare, but you can see here the contribution from energy and consumer staples has been negligible to flat. So do take a moment to study this chart, very interesting, and you can see the presidencies broken down here. Okay, please take a moment to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative and do take a moment to read this risk warning thoroughly. Thank you for your time.